This week's finance topic is around banking. Before we get into the details of the presentation, go ahead and take a look at the quote at the bottom of this slide. Money is a good servant, but a dangerous master. What do you think this quote means? The author, H.L. Hunt, lived over 300 years ago, but do you think that our relationship to spending and savings has changed over the last 3 centuries? Why or why not? Checking and savings accounts are also referred to as demand deposit accounts or DDAs. This is a term that a lot of bankers will use when they're referencing checking and savings accounts, so just keep that in mind if you hear them tossing that acronym around. If you want a checking or savings account, where do you go? You can first try a commercial bank. These are your big name banks like Wells Fargo, Chase, or Bank of America. These banks are for profit, owned by stockholders, and offer accounts for individuals and businesses. Then there are credit unions. Credit unions are not for profit, they are member owned, and have lower operating costs. An advantage to credit unions are that they typically offer higher interest rates for savings accounts, but also lower rates for any type of loans. So if that's something that's really important to a consumer, they can shop around at different credit unions. Then there are cyberbanks. Cyberbanks have all transactions done electronically and all their banking is done online. Some of these banks may not have any physical locations in the area, and maybe there's only one in the country. I know with my mom, she used to bank with Charles Schwab since she used to work for that company, and they didn't have any physical locations in Colorado. They might have had one in Nevada or Utah or something like that. However, everything she did was online. She had to get direct deposit into that account, check all of her statements online, and if she did ever need to deposit or get any cash, she could use any ATM. It didn't have to be a specific Charles Schwab ATM, but she could use, the ATM that's at the gas station, ATM that's at the grocery store, and not be charged any fees. So this option may be good for someone that travels a lot. Maybe they are around the country a lot and they just need ease of access. This is probably a really good option. Then there are consumer finance companies. Any of these options I would say should be a last resort if you are needing any money or cashing any type of checks. So with cash advances, if you are not familiar with a cash advance, these companies will front you money from your paycheck before you actually get paid, which sounds pretty cool. However, they charge really, really high fees in order for them to front you the money. A lot of times, cash advance places will charge you 200, 300% interest rate on the amount that you're taking out, and that's really how they make their money. I would definitely be very careful with this because then you get caught up in a vicious cycle where you'll keep having to advance money just to kind of keep up and play catch up with what you owe. Then there are some check cashing places. With these places, they may charge you a one-time fee to cash your paycheck, or they may charge you a fee just based on the amount of your paycheck. A lot of grocery stores do this. I think this is an option that people who don't have a bank account or can't get a bank account use, but again, there's just that price of a fee to pay. Then there are pawn shops. Pawn shops will kind of work the same way where they'll front you or loan you some money in order, to keep a possession. However, again, they'll charge you fees and interest rates until you pay that money back. So yes, you'll pay that money back, but just know that there are even more associated fees with borrowing that money. So what keeps your money safe? You always want to ensure that wherever you are banking that they have account insurance. So with FDIC insurance or Federal Deposit Insurance Corporation, that will cover up any funds at any commercial banks for up to $250,000. So if the bank were to go under or something were to happen to the bank, any of your money up to $250,000 would be protected. With the National Credit Union Association, it kind of works the same way as the FDIC. It just insures your money up to a certain dollar amount. So how do financial institutions make money? There are a number of different ways. Mostly it's from the type of fees that they collect from their consumers. So one way that banks collect their money is through transaction or service fees. These could be anything from cash machines, check cashing, as I mentioned, if there is a fee associated with cashing your check, or with overdraft protection fees or overdraft fees when you go over your account. Some other fees for service that you should understand is a monthly service fee. So typically, especially teen accounts won't have a monthly service fee. However, when you get your own account as an adult, you have to meet certain requirements to avoid a monthly fee. The monthly fee can typically be avoided by having a direct deposit into your account or by keeping a certain balance in your account at all times. Typically, the balance that you have to keep in your accounts to avoid the fee could be anywhere from $500 to $750 throughout the whole month. So just be aware of that. And this is something that you can always ask your banker about, and just to ensure that you know what the requirements are to avoid that fee. Many people don't use checks very often, but some banks would charge a fee for every check that you used. And then, as I mentioned, if you're below a minimum balance, you can incur a fee as well. So the difference between an ATM and a cash machine, really the big difference is that a cash machine gives you cash by charging your debit or credit card. So again, tons of fees associated with that. Whereas ATMs, if you're sure to use your ATM from your bank, you shouldn't be charged any type of fee. So really it's just that fee difference, and that's something that you want to make sure to take a look at before you use any type of machine to get out cash. Debit cards we've already reviewed, but just remember that your debit cards are linked directly to your bank account. They typically require a PIN number, and you can use them at ATMs and cash machines and to use for online transactions. Just be aware that you can overdraw your account with a debit card. So there are certain things that you can place on your checking account, whether or not you want them to overdraft your account. I know some people want to have that option. Let's say they made a $10 purchase, but they only have $5 in their account. Some people may want that transaction to go through so they don't feel embarrassed when they're at the store and there are a line of people behind them. However, if you're really cautious and you want to be careful about not getting any fees, you may ask the bank to decline your card if you don't have enough money. It really just comes down to personal preference and really just being educated about the type of fees and what options that you have. So some of these other fees that we'll talk about within these next slides: NSF or non-sufficient fund fees, overdraft protection, and stop payments. So NSF or non-sufficient funds, this is when there are not enough funds in your account to cover a purchase. They'll typically return the check or return that to the payee. So if you mailed a check, let's say, again, I know this is something that you wouldn't do, but if you mailed a check and there were no funds in there, they would return the check to you and you would get charged a fee. Overdraft protection. So if you overdraft your account, you just spend more money than what you have in your account. However, you can make a prior arrangement with your bank to pay that purchase if it does go over the amount that you have. So again, as I mentioned, people like to have this option just because they want to save face and not be embarrassed at the store. But if you do overdraft your account, you can have that protection through a savings account or a credit card. So again, if you made a $10 purchase and you had $5 in your account, they could take that $5 from your checking or from your savings account rather, or your credit card, assuming that you had enough money in those accounts to cover it. There is still a fee associated with having overdraft protection. However, it's a lot less than being charged an overdraft fee. This will vary from bank to bank, but that's something that you definitely want to talk to your bankers about just to be sure that you're aware and knowledgeable about those fees. A stop payment, a consumer can request that a financial institution not pay a check that they have written. Typically this is with checks, but maybe if you have an automatic payment like Netflix or Hulu, something like that, banks can typically stop those as well. So maybe you try to cancel something or you have some type of subscription payment and you can't cancel it directly or they're giving you grief about it. You can ask the bank to block those payments before they take it out of your account. There are some restrictions to this as well, and a lot of times I've seen people do this in fraud instances. However, there is a fee with stop payments as well. They're not too much of a fee. I can't remember off the top of my head what a stop payment would be through Wells Fargo. However, just know, again, there's a fee associated with this, but this is something that you would have to do if there was something that you were worried or concerned about. So deposit accounts and identity theft, this is something we'll talk about a little bit later, as I mentioned, in terms of identity theft, but it is really your responsibility to protect your account, making sure that you don't give out any of your personal information and that you monitor your information on your bank accounts pretty regularly. So obviously don't give out account information. Don't give out your PIN number or your account number, anything like that that can be compromised or used to take money from your account. It's a good practice to review your monthly statement just to kind of double check that everything adds up. And on your end, make sure that you keep accurate records. I know some of you may not necessarily write down every single purchase that you make, but just being aware or having some type of tracking system of what you spend on a regular basis will help you keep track of everything as you review your monthly statements, as I mentioned. If you do see anything fishy on your accounts or any suspicious activity, definitely notify your financial institution right away. There are a lot of options that your banks will offer if you are a victim of identity theft or if there are suspicious transactions on your account, and they'll help you work through that and help you get your money back as soon as they can. Finally, with money management, it's really just important to know your rights and responsibilities under consumer protection laws. The consumer protection laws isn't something that I'm going to review in depth, but when you go to a bank and open up an account, they give you tons of paperwork. That is what outlines all of the protection laws. So really just don't be afraid to ask questions from your bankers and just make sure you know all of the requirements and what's involved with banking so you don't have a negative balance, and so you don't get charged unnecessary fees.